all my dear students, I hope you all are doing good. So let's go ahead with the next part of the discussion of depreciation which we have left in the last lecture. So in the last lecture we have done till the discussion of what? Till the discussion of unabsorbed depreciation. Okay. So let's go ahead with the next one now. How to claim depreciation in case of amalgamation, demerger and succession. So how to claim depreciation in case of these three cases? Amalgamation means merger of companies. Demerger means separation of companies. And succession means where one entity is succeeded into another entity. Like partnership firm is getting converted into a company or a sole proprietor is getting converted into a company, that is called as a succession. More or less all three of them is nothing but what? Nothing but a change of entity. Okay, so how to claim depreciation in those cases? Let's talk about that. Okay. So I'll give you one example on the board to explain you in a better manner. Pay attention on the board, please, all of you. So suppose there is a company A Limited, okay, and today is 1st April 2022, and this company has a furniture of 10%, okay, and the opening WDV of the furniture is say 1 lakh rupees, okay, and they have purchased for some furniture of 2 lakh rupees, and they have purchased and put to use from 1/7/2020, okay. Now after a few months, what happened? Say on 4th of October 2022, it got merged with B Limited. So B Limited is what? Amalgamated company. And A Limited is what? Amalgamating company. So amalgamated company got merged with what? With the amalgamating company got merged with what? With the amalgamated company. Now, how to claim depreciation in that case? The government says that compute depreciation as if no amalgamation has taken place. You have to compute as if nothing has happened, as if no amalgamation has taken place. Compute depreciation in that manner. So let's compute now. So if I compute depreciation with an assumption that no amalgamation has taken place, so in that case I will get depreciation of, on 1 lakh rupees I will get depreciation of 10,000, and on 2 lakh rupees I will get depreciation of how much? 20,000 rupees. Okay. The government says that compute depreciation as if nothing has happened, as if no amalgamation has taken place. Okay. Now what? Now the government says that now segregate that. Now you have to segregate between both of them. Both of them means what? Between A Limited and B Limited. Between A Limited and B Limited. So listen carefully. While computing, you have supposed to assume that no amalgamation has taken place. But once it is computed, once you get the amount, then you have to segregate between both of them on the basis of number of days the assets are used by them. So now, for how many days the assets are used by them? Let me see. This asset, this first one is used for 365 days, okay, but the second one is used from what? From 1st of July. It is not used for 365 days. So accordingly, you have to divide. Now let's talk about the first one. The first one is used for 365 days completely. So what are the number of days? So from 1st April to 3rd October, a day prior to this, it was A Limited. And from 4th October to 31st March, it was B Limited. So from 4th October, it comes to 179 days. And this will come to 186 days. So 186 plus 179 will come to 365. So we have to divide this entire depreciation in this ratio. Okay. What is the ratio? The ratio of number of days the assets are used. How I got 186 from 1st April to 3rd October. How I got 179 from 4th October to 31st March. If I compute, I'll get 179. You can compute that. Okay. Now, in case of B Limited, in case of this second asset, which is purchased during the year and put to use from July, in that case, the ratio will change. The ratio of B will remain 179 only because B will not change. A will change. For A, now we have to count from 1st July. From July 31, August 31, 62, September 30, 92, and October 3 days, 95 days. Okay, so we have to divide this in the ratio of 95 is to 179. So this is how the depreciation will be bifurcated between the amalgamating company and the amalgamated company. Again, I am saying, while computing depreciation, you are supposed to assume that no amalgamation has taken place. Once it is computed, then you are supposed to segregate between both of them on the basis of number of days the assets are used by them. Okay, so this is what it is given here also. The example is here also. You can see over here 186 is to 179 and 95 is to 179. You can see this over here. 95 is to 179, 186 is to 179. Can you see this? So I have put this example here also. You need not copy this. It's okay. You are not supposed to copy this particular example. It's all fine. I have done this particular thing in the textbook also. Okay. And the provision is over here, which says that you're supposed to compute depreciation as if no amalgamation has taken place. And once it is computed, then you are supposed to segregate between both of them. Okay. Now the question is, the bigger question is, pay attention. The bigger question. Listen to the bigger question. The bigger question over here is, now these assets will be forming part of B Limited's block now, because these assets are getting transferred to B Limited. So these assets will now form part of what? B Limited's block. Okay. So now the question is, at what value they will enter the block of B Limited? At what value? What value they will enter to the block of B Limited? Now logically speaking, if you ask me, it should enter to the block of B Limited at 1 lakh minus whatever depreciation A has claimed, at 2 lakh minus whatever depreciation A has claimed, right? This is the value that they will enter to the block of B Limited, because that is the WDV in the hands of A Limited. This is the logical answer, okay? But government goes beyond logic and gives great benefits to amalgamation. Great. You will not imagine that kind of benefits the government has given to amalgamation. One cannot imagine that kind of benefits the government has given. That level benefits the government has given to amalgamation. What benefit the government has given over here? The government says that B Limited will record the asset at the value at it was, at the value at which it was there in the hands of A Limited. That is, B Limited will record the asset at 1 lakh and 2 lakh itself. Will record the assets at 1 lakh and 2 lakh itself. So this will not lead to dual benefits. Yes, it will lead to dual benefits. The government says, so be it. Let it be. Let the taxpayer enjoy dual benefits. We want to encourage amalgamation. We want to give benefits to amalgamation. We don't want to discourage amalgamation. In every possible manner, we want to encourage amalgamation. And there are a lot of benefits the government has given to amalgamation. Later on, we are going to do one separate topic on amalgamation. Don't worry. One entire topic is based on amalgamation. We'll be doing that particular topic later. So it's a very great benefit given by the government of India. Great benefit. Therefore, you will record, B Limited will record the asset at what? 1 lakh and 2 lakh. Okay. Where is it written, sir? It's written over here. What will be the value of the asset to be shown in the books of B Limited? Value of opening WDB will be taken as the block of B Limited. The value of the actual cost of 2 lakh will be forming part of block of B Limited. Just check it. It's very important. Okay. Extremely important. This point is very critical. Otherwise, you will apply your own mind, will make your own provisions in exam. Without asking the finance minister, you will start to make the amendments at your end. Okay, don't do that, please. Okay. Now, coming to the last few things which are there in this particular chapter of depreciation. Pay attention, please. Next part is about, pay absolute attention. I say, pay absolute attention. The next part is about SLM depreciation. SLM depreciation. At the beginning of this chapter, I have told you there are 4 kinds of depreciation. Normal depreciation under the block scheme, additional depreciation under the block scheme, then SLM depreciation for power generating assets, and then terminal depreciation for power generating assets. So now we are talking about the SLM depreciation. The SLM depreciation is for whom? It is for power generation, power distribution assets. Someone who is related to power generation or distribution. Power generating units. They have 2 options. Option 1. They can go for WDV. Option 2, they have both the options open. Whatever they want to take, they can take. Second option, SLM depreciation. But both options have some pros and cons. If you go for WDV option, then you can also get additional depreciation if you fulfill the conditions of additional depreciation. But if you go for SLM, then no additional depreciation. Additional depreciation is only available to those associates who go for WDV and not for SLM. Okay, this is the first thing that you have to keep it in your mind, which is written in your book as well. You can see this over here. If the associate claims depreciation as per this section 32.12, which is WDV, then he is also allowed to claim additional depreciation. But if he claims as per SLM, then he cannot claim additional depreciation. This is the first thing that you have to keep it in your mind as a student. Okay, I hope it is clear to all of you. Okay, this is the first thing. Now coming to SLM, we have done WDV, we have done additional depreciation. Now we are interested in SLM depreciation. So how SLM depreciation is computed? It's the most simple thing in this world. That whatever is the cost of asset, you have to depreciate a percentage of that every year in the same manner. There is no change of depreciation in SLM. Every year the depreciation amount will remain same only. This is the most simple thing that anybody can do in this world. So if I purchase an asset, say the original cost of the asset is 100 rupees, okay, and the rate of depreciation is say 10%. So I will start to depreciate the asset, okay, of 10 rupees every year. Say after 3 years. After 3 years, the depreciation would be exactly 30 rupees, okay, and the WDV of the asset will be how much? 70 rupees. So I will claim what? Claim 10 rupees every year. Okay, now listen carefully. The real story starts now. The real story is, what if I sell this assets later on? And if I sell this asset for different value? Now, what is the depreciation that I have claimed so far? I have claimed 30 rupees. I have taken 30 rupees benefits under the head PGBP so far. Okay. Now, suppose case 1. If I sell this asset for 50 rupees, then what will happen? Case 2. If I sell this asset for 90 rupees, then what will happen? Case 3. If I sell this asset for 120 rupees, then what will happen? So what will happen in these 3 cases? If I sell the asset for 50 rupees, for 90 rupees, for 120 rupees. So the government has provision for everything. The government says that if you sell the asset at lower than WDV, how much lower we are selling? 20 rupees lower. Then in that case, this will be allowed as deduction to you. This will be a benefit for you, and it will be called as terminal depreciation under section 32 subsection 1 clause 3. What it will be called as? It will be called as a terminal depreciation. Okay. Terminal means something which is ending. The asset is ending. The asset is selling. You are selling the asset, so the asset is ending. So the depreciation at the end of the period of the asset will be called as terminal depreciation. I hope it is clear. Sir, what if I sell for 90 rupees? If you sell for 90 rupees, it means you are selling for more than the WDV. Then 20 rupees will be deemed income under 41(2). And this deemed income is also known by a technical name called as balancing charge. What it is called as? A balancing charge. Whatever benefit you have taken earlier, reverse that. You sell for more than WDV. So what if I sell for 120? When you sell for 120, you are selling for more than WDV as well as more than cost. You are selling for more than WDV also, you are selling for more than cost also. In that case, what will happen? In that case, you have to bear the tax under 2 heads of income. First, PGBP. In PGBP, whatever benefit you have taken in PGBP earlier, first reverse that. 30 rupees will be called as balancing charge under 41(2). The balancing charge is going to be that much amount which you have taken as benefit earlier. How much benefit you have taken earlier? 30 rupees. Reverse that. That much will be balancing charge. And then capital gain. Selling price 120 and cost of acquisition of the asset is 100 rupees. And therefore 20 rupees will be charged under the head capital gains. This is how your 50 rupees is getting charged. 30 rupees under PGBP and 20 rupees under the head capital gains. Can you see this? 30 rupees under PGBP and 20 rupees under the head capital gains. So if you sell for more than cost, then your balancing charge cannot be more than 30 rupees. Whatever you are realizing over and above the cost, whatever you are realizing what? Over and above the cost, that will be considered as what? That will be considered as a capital gain. So if you sell for less than WDV, then terminal depreciation deduction you can claim. If you sell for more than WDV, then balancing charge. If you sell for more than cost also, then to the extent of cost, balancing charge. 70 minus 100. To the extent of cost, balancing charge. Above cost, capital gains. Sir, then if you are computing capital gains in the third case, then why you are not computing capital gains in the first and the second case? That is correct. Then I should compute capital gains in the first and the second case as well. What is the first case? Selling price is 50 rupees and cost of acquisition is what? 100 rupees. In the first case, I will get 50 rupees loss. I should claim here also capital gain. I should show loss and then I should set off that loss against other capital gains. In second case, selling price is 90 rupees. Cost of acquisition is 100 rupees. Here also I should set off 10 rupees loss. Here it is gain. So when it is gain, sir, you are computing capital gains. When it is loss, you are not computing. So here the government has given a special mechanism. You have to be absolute paying attention now here. Absolute attention has to be paid here. What the government has done? The government has made a trick over here. Let me tell you what. The government has made such a trick that if there is a gain which is coming, then it will come. But if there is a loss, then this amount will become zero. Now how? How it will become zero? Because the government has said that you are not supposed to take the cost of acquisition as 100 rupees, but you are supposed to take the cost of acquisition as what we are going to define and what they have defined. Check. They have defined, they have said us that how to compute capital gains in such cases. In case of power generating units who are opting for SLM depreciation. Sale consideration minus not the cost of asset but the adjusted WDV. You are not supposed to take 100 rupees here, but you are supposed to take the adjusted WDV. What is adjusted WDV? Adjusted WDV is this formula. WDV plus balancing charge minus terminal depreciation. Then whatever is coming, that will be considered as adjusted WDV. Now why? Otherwise it would lead to dual benefit. Let me tell you how. Can I say the difference between 50 and 70 is already claimed as terminal depreciation? Yes. Then how the hell you can again claim the difference between 50 and 100 as a capital loss? It will lead to dual benefit. Already you are claiming the difference between 50 and 70 as terminal depreciation. Then what sense does it make to compute again the loss between 50 and 100 as what? Capital loss. The government has said don't take 100 rupees as what? As your WDV, as a cost. Take this formula as your cost. WDV plus balancing charge minus terminal depreciation. So this cost will be WDV plus balancing charge, if any, minus terminal depreciation. So in first case, what is WDV? 70. In first case, is there any balancing charge? No. In first case, is there any terminal depreciation? Yes. How much? 20. So this will become your cost of acquisition. Now if I take this as cost, remember this will come to 0 always. Similarly here also that same formula will apply. In second case, WDV is 70. Balancing charge is how much? Balancing charge is 20 rupees. Okay. You can see over here. Less terminal depreciation 0. Therefore, this will come to 90. And if I compare 90 with selling price 90, it will again come to 0. Okay. Third case also will apply this. WDV 70. Balancing charge is how much? Balancing charge is 30. Terminal depreciation 0. Adjusted cost is 100. This is 100. And therefore, here you will get gain of 20 rupees. So they have made the formula in such a manner that if there is a loss is coming, then it will become 0. If loss is coming, it will become 0. If gain is coming, it will remain 20 rupees. Gain will remain gain, but loss will be reduced. So what are you supposed to do first of all? 100 rupees asset, 30 rupees depreciation, 70 WDV. You have to compare WDV with selling price. If selling price is less than WDV, then terminal depreciation. If it is more than WDV, then balancing charge. If it is more than cost, then it cannot be more than what? More than the balancing charge. More than the depreciation claimed earlier. If it is more than 100, then it cannot be more than 30 rupees. Okay. Then you are supposed to compute capital gains. While computing capital gains, selling price will remain same only at everywhere. Selling price will be selling price. Whatever it is, 50, 90, 120, whatever you want to take. But the cost will change. WDV plus balancing charge less terminal depreciation. You have to use this formula to compute the cost. Okay. So this is the example which is given here also. You can go through this example if you want. Okay. And then we'll go ahead with the next test. Okay. So the example is here over here. Don't worry. Okay. Just go through this example. So there is one general note over here. I would like to just tell you all about that. What happens by default in income tax law in the year of sale, we do not get depreciation. So no depreciation in the year of sale by default under the income tax law. But there are two exceptions. Sir, why there is no depreciation in the year of sale? Because to claim depreciation, the asset has to be there in the block on 31st March. So if the asset is not there in the block on 31st March, you cannot get depreciation. Therefore, by default, under the income tax law, in the year of sale, if your asset is not there on 31st March in the block, you cannot get depreciation. Therefore, by default, under the income tax law, no depreciation in the year of sale. But there are two exceptions where you get depreciation in the year of sale as well. Which are those two exceptions? Exception number one. Exception number one is just now what we have done, terminal depreciation. Terminal depreciation is an exception where in the year of sale also you are getting some kind of depreciation. 50 minus 70, you are getting or not? Yes. And second exception is the case of amalgamation. In case of amalgamation, in the year of sale, also amalgamating company who is selling the assets to amalgamated company, they are getting the depreciation. Check. These are the two exceptions. Not relevant for exams, but as a knowledge, should be knowing it that yes, there are two exceptions where you get depreciation in the year of sale as well. Okay. So these are the only two exceptions where you get depreciation in the year of sale. Okay. I hope it is clear to all of you. Now coming to the discussion ahead, pay attention please all of you. Now I am talking about something which is very important, section 43A first, and then I'll compare that with 43AA. Okay. Now this is not that important, but this is very important. Now what is 43A all about? 43A talks about, and there are some conditions to be fulfilled to come under 43A. Pay attention please. What are the conditions? I am not interested in 43AA as of now. Right now I am only interested in 43A. 43A is applicable if a person is importing a fixed asset. You are importing a fixed asset plus there is a foreign currency loan attached to it. You are buying the asset through a foreign currency loan. If you are importing an asset, not buying from India, and there is a foreign currency loan. So I am importing an asset and I bought the asset for $1 lakh and there is a foreign currency loan on it. Then how will I recognize the gain and loss? So the government says that if you are importing an asset and there is a foreign currency loan, then the gain or loss on the date of payment, not on balance sheet date. Not supposed to adjust anything on balance sheet date. The gain or loss on the date of payment has to be what? Has to be adjusted in the WDV of the block of assets. So whatever gain or loss comes on the date of actual payment has to be adjusted in the WDV of the block of assets, not on balance sheet date. Okay. I'll show you an example that will give you a clear idea. You can take a photo of that example also later. See, example on 43A. This is 2223. I bought a furniture of $1 lakh. On that date, $1 was 70 rupees. Okay. So I'm making the block of asset of furniture. Opening WDV nil. Value of furniture is 70 lakhs. 1 lakh into 70. Less nothing. Why? Do not adjust anything because I'm not making any payment. Claim depreciation of 10% on furniture. 63 lakh is the WDV. This is the WDV which is the next year. Now on 15th of June 2023, I paid $20,000. When I paid $1 became 75 from 70. So there is a 5 rupee loss for me on every dollar. How much I paid? $20,000. So 20,000 into 5 rupees loss. 1 lakh rupees is my loss. So loss is my additional cost. So you have to add back to the WDV of it. So that's what I'm saying. What has to be kept in mind in 43A is you have to adjust in the WDV of the block of asset, first thing. And second thing, you have to adjust on the date of payment, not on the date of balance sheet. In the first year, there is no payment. So I'm not making any adjustment of gain or loss. In the second year, I'm making payment of $20,000 and there is a loss of 5 rupees per dollar. So I'm adding 1 lakh rupees. You can check. Then you have to reduce depreciation and then this will become your WDV. In the third year, again I made a payment of $20,000 when $1 was 65. So I recorded the asset at 70, but now the value of the dollar is 65. So there is a gain on every dollar. So 20,000 into 5, 1 lakh rupees will be the gain on payment. So that much has to be reduced from the WDV of the asset. And then whatever is the amount, you have to claim depreciation at the rate of 10%. And after that, the WDV will be there. The same way it will continue for the next few years till the time the entire $1 lakh is not paid to the vendor, okay, or not paid to the bank. You can take a photograph of this. This is a very important section for exam. Very, very, very important. Okay. Now, coming to the next discussion. Again, I am saying for 43A, gain or loss on the date of payment. Adjust in the WD. No adjustment on 31st March. But what about other losses? What about other gains? There can be other losses and other gains as well. The gain and loss cannot be only on fixed assets. There can be gain on purchase of raw material. There can be gain on purchase of other products. There can be gain on sale of products. There can be gain on debtors. There can be gain on creditors. There can be gain on liabilities. There can be gain on conversion of foreign branch into Indian branch. There can be gain or loss on forward contract, options contract. What has to be done in that case? So for that purpose, everything is not covered in this section. So the government made 43AA, which covers rest of the things. 43AA is a balancing figure. The balancing figure. Whatever is not covered in 43A will be covered in 43AA. How, sir? Check. Any gain or loss other than 43A means other than this. Other than this means other than those cases where you purchase imported foreign asset and with a foreign currency loan. Apart from that, whatever gain or loss is there on account of change in the foreign exchange rate shall be income or loss as per ICDS 6. Whatever gain or loss is coming apart from this one, any other gain or loss, like, sir, like monetary gain, non-monetary gain, translation of financial statement of foreign operation. These are some of the examples. Forward contract, foreign currency translation reserves, any kind of gain or loss. If it is coming, if it is a gain, then it is an income. If it is a loss, then it is a loss. It will be allowed as a deduction to you, don't worry. So how to record this? Just like accounts. Just like account. Like, sir, you have to restate on balance sheet date, then you have to again restate on the date of actual realization. Today I am doing a transaction, so you have to record as per today's date. Then on 31st March, if it is outstanding, then you have to reinstate. Then after that, if you have made the payment or received the payment, then you have to check the actual payment rate, just like accounts check. Record the transaction as per the rate on the date of transaction. Then on 31st March, it has to be reinstated as per the rate prevailing on that date. The way you do in accounts. Today's rate, you have to record the transaction. 31st March, you have to reinstate. And then when you actually realize or pay or realize whatever is the transaction, you have to record the gain, actual gain or loss. Comparing which date? Comparing the date of 31st March. This is what you are supposed to do. So you have to be very clear when you see a question. If there is an imported asset and there is a foreign currency loan, then go for 43. Any other gain or loss, go for 43 AA. And in 43A, you will adjust in the WDV of the block of asset on the date of payment. Any other gain or loss, you will adjust as per accounts. Okay. So there is one ICDS also over here, which also says the similar things only, that you have to record on the date of transaction, then you have to record initial recognition, then on last date you have to convert, etc. It is exactly like accounts only, so I'm not speaking much about it. It is similar to your accounting standards only. That first initially you have to recognize on the rate of that date, then on 31st March you have to re-recognize, you have to reinstate the value of that particular item, increase, decrease, gain or loss, whatever it is. Okay. On 31st March, you are supposed to change the data. Okay. So this is what your chapter of depreciation is all about. A big chapter, a long chapter, and an extremely important chapter. We will be doing some questions later on. Don't worry, at the end of the chapter of PG. Okay. You can just go through it once and then we'll move on to some other data. So now let's go ahead with some other deductions in our life. Yeah, we are not here to only learn depreciation in our life. We are interested in learning all the deductions from section 30 to 37. So let's move on to certain other deductions one by one. Now we are moving on to the third topic, where we are going to do certain specific deductions which are covered in section 30, 31 and 36. And after that, after we are done with this, in the next lecture we are going to start with what? Sector wise deductions. Okay. So let's start with specific deductions. The first specific deductions over here, section 30, is certain expenses in relation to building. If you take building, if you are having a building in your business, then you can get certain deductions with respect to building, like rent of building, like rates and taxes of building, like repairs of building, like insurance of building. So you can get all these deductions. Now, for example, in that also you have to think from two perspectives. Suppose I am the owner of the building and I am using that building for my business. Or suppose I am the tenant of that building and I am using that building for the business. Both is possible. One possibility is that I am the owner and I am using that building for my business purpose. Second is I am the tenant, I am using that building for my business purpose. So what is the difference between the two? So if you are an owner, then, and if you are a tenant, what is the difference? The difference is rent. If you are an owner, you cannot pay rent to yourself now. But if you are a tenant, then you have to pay rent also. Apart from that, other expenses might also be there. So for owner, there are certain expenses which are lesser than what the tenant has to pay. That is rent. So tenant will get the deduction of rent also, rates and taxes also, repairs also, insurance also. But the owner will get deduction of rates and taxes if the owner is bearing it, repairs if the owner is bearing it, or the insurance premium if the owner is bearing it, for the purpose of building, which is used for what? Business purpose. Okay. So this is the first thing. The second thing which I would like to tell you, rates and taxes. If you want the deduction of rates and taxes, then you cannot get the deduction of rates and taxes on accrual basis. You have to make actual payment as per 43B. See this. So rates of taxes are allowed as deduction on actual payment, and actual payment, not on accrual basis. It is not allowed as deduction on accrual basis. It is allowed on payment basis, rates and taxes. This is the first thing that I would like to tell you. Second thing that I would like to tell you is repairs. If you want the deduction of repairs, then the nature of repair has to be revenue repairs. Capital repairs are not allowed. If you want deduction of repairs, then the repair has to be revenue, revenue, and revenue, not capital. So what if I do a capital repair? Will I get deduction or not? Let me tell you. By default, what is covered in section 30 is only revenue repairs, not capital repair. Sir, can I get deduction of capital repair? Let me tell you. If a owner is doing a capital repair, then the owner, if I am the owner of a building, I am doing a capital repair on that. Then you can capitalize that much amount and you can claim depreciation on it. Check. Suppose there is a building on which I am doing some capital repair of 50 lakh rupees. So you can capitalize that much amount to the cost of building and then you can claim depreciation on it 10% every year. Coming to tenant. Sir, what if a tenant does a capital repair? First of all, it is very hard to imagine that a tenant is doing a capital repair. But in case if it is done, then in that case also the government says that we will treat the tenant as deemed owner and we will give deduction to the tenant in the form of what? Depreciation. If I am a tenant in a particular property and I am doing a capital repair in that property, then in that case I will be deemed to be the owner of that property and then I will get the deduction of depreciation under section 32. Don't worry. So capital repair, you will not get direct deduction in this section, but you can get deduction in the form of what? In the form of what? Depreciation. The owner will also get, the tenant will also get. Both of them will get. Okay. So what all things I have said you so far in this section? Building. Building is the asset which is covered in this section. If you are an owner of building, then you will get rates and taxes if paid, repairs if revenue, capital also allowed, but in section 32. And insurance premium if it is for building. If you are a tenant, then you will get rent also apart from the other expense. Okay. Now, coming to the discussion of one point. Suppose, pay attention please. Now, this is an important point which has been asked in exam once. Pay attention. Suppose I am a tenant and there is a landlord. And if I do a revenue repair, then it is allowed as a deduction. But there is one condition for that. Condition under section 30. The condition says that you will be allowed the deduction only if the tenant has undertaken to bear the cost of repair. Otherwise not. It means it has to be written in the agreement between the tenant and the landlord that if there is anything happening to the property, the tenant will bear the repairs of the cost. Then only it is allowed. It is not allowed otherwise. So the condition has to be mentioned in the agreement. Now, for example, that condition is not mentioned. And if the tenant does some repair, which is necessary for business, is necessary for, but it is not written in the agreement, will he get the deduction? The answer is no. But the code has said that he will not get deduction under 30, but he can get deduction under 37(1). Don't worry. So by default, if the tenant wants deduction under 30, then it has to be written in the agreement that the expenses will be borne by the tenant. But if it is not written, then he cannot get deduction under section 30, but he can get deduction under 37(1) subject to the conditions mentioned under 37(1), which has to be fulfilled. It's very important point. Mark it down, please. If an assessee incurs expense on repairs for which he has not undertaken to bear the cost of repairs, then such deduction will not be allowed under section 30. However, if such expenses is incurred for the purpose of business or profession, it will be allowed under section what? Under section 37(1). Just check it once. It's an important point. Okay. Now coming to what? Section 31. A small section. Section 31 talks about repairs and insurance. Only repairs and insurance of plant, machinery and furniture. Again, the repair over here has to be a revenue repair, not capital in nature. So if there is a plant like AC, like furniture, like machinery, like car, etc., if you are doing some repair on that, revenue repair, not capital. Or if you are paying insurance premium on that, you will get deduction of these two expenses over here. Okay. Now, sir, what if I take plant, machinery and furniture on rent? Will I get the deduction of rent? No, no, no. This section does not speak about rent of plant, machinery and furniture. You can see very clearly it's written repair and insurance, not rent. This section does not talk about rent of plant machinery and furniture. This section only talks about repairs, insurance and insurance, not rent. Sir, so what if I taken some plant machinery and furniture on rent? Then you can go to 37.1 and you can see over there, if you are fulfilling the conditions of 37.1, then you will get the deduction under section 37. The repairs of this particular thing, the rent of plant machinery and furniture can be allowed as deduction under what? Under 37.1. Okay. So these are the two small sections, not very great as such. It has to come, it will come in the form of some adjustments in the sums. Otherwise, it's of not great importance. Now coming to the next section. The next section which we are doing is not 33, 34 or 35. Those are sector-wise deduction. That is going to come in the next topic. Now we are going to do with what? With some other deductions. Small deductions. Like if you pay insurance premium for what? For securing your stocks. So to secure your stock in trade also you pay insurance premium. Yes, you will get deduction under section 36(1) clause 1. Okay, so this is an insurance premium for your stock. Similarly, if you are paying insurance premium for your health of the employees. So I am employer, you are employee, I am paying insurance premium for your health. I am employer, you are employee, I am paying insurance premium for your health. That also I will get deduction. Yes, employer carrying certain expenses for employee, it is allowed as deduction. This is one amongst them. I am taking a health insurance premium for you. So I will get deduction, but only condition over here is it has to be other than cash. Don't make the payment in cash. It is not allowed. It is not allowed to be paid in cash. It has to be paid by any mode other than cash. Okay, don't pay in cash. Third, if I am employer, you are employee, and I am giving you bonus and commission. So if an employer gives bonus and commission to employee, that is also covered in 36 subsection 1 clause 2. But the condition over here is it has to be actually paid. It is allowed subject to 43B, which we will be doing later on in the chapter of disallowances. But right now also I would like to tell you that it is allowed as deduction as bonus and commission to employees only if you have actually made the payment. It is not allowed on accrual basis. Not allowed on accrual basis at all. So the three deductions which are there in front of us: insurance premium for stock, health insurance premium for employees other than cash, and then bonus and commission to employee. Actual deduction, actual payment deduction, not on accrual basis. Now there is one paragraph over here which is technical. Now let me explain you this technical paragraph with the help of example. However, where some represent profits, then not allowed. Now what do I mean by this? Now let me explain you what do I mean by this. So there are certain categories of assessee who try to evade tax in certain manner. Let me tell you how. Let me tell you how. Just a second. There is a private company in which there are 4 shareholders: A, B, C and D, out of which C and D are also employees. Okay, and all shareholders are 25% shareholders. 25%, 25%, 25%, 25%. Now the time has come to give them dividends because they are shareholders, so we have to pay them dividends. So what are we doing? To the first 2 shareholders we are paying 25,000 dividend, and to the third and the fourth we are paying only 5,000 because these 2 are employees, and the remaining 20,000 we are showing them as what? As bonus. We are showing them remaining 20,000 as bonus. Okay. Why? The reason being, because if I show this 20,000, this 20,000 and this 20,000 as dividend, then I will not get the deduction of dividend, because under income tax law, dividend is not allowed as a deduction because it's not an expense, it's an appropriation. So rather I am trying to show this 20,000 and this 20,000 as what? As bonus. Actually it is not bonus, it's an appropriation of profits. If you show the profit portion, this is the profit portion, as bonus, then that much bonus will not be allowed. So this is a profit portion which should have been shown as distribution of profits, but you are showing that as bonus. It will not be allowed. This is what this sentence has to say. However, where some represents profits, that's yes, this 20,000 and 20,000 represents profits, then it is not allowed. If there are four shareholders holding equal share, then all four of them should get equal dividend. Why there is a discrepancy or disturbance in the dividend payment? For the first two shareholders who are not employed, you are paying the entire 25,000. For the rest two, you are paying only 5,000. And the remaining 20,000, which is actually a distribution of profits, you are showing that as what? As bonus. Then it is not allowed as a deduction. You can take a note of this example if you want. Okay. You can take a photograph of it. Now let's go ahead with the next deduction, which is one of the most important deduction in practical life as well as for academic life at both the levels. That is interest on borrowed capital. So do we get deduction of interest on borrowed capital? Definitely yes. Sir, what do I mean by borrowed capital? Borrowed capital means first of all only money, money and money. It does not include any other thing. And if it is money, money and money, there has to be an element of what? Refund also. Just a second, this pen is not working. Let me check what is happening. So the first thing is the amount of money has to be borrowed. The borrowed means what? Borrowed means there has to be an element of refund. You have to repay that money to someone at some or the other point. If not on immediate basis, at least after 1 year, 2 year, 3 year, you have to repay that money. Okay. So borrowed capital means that you have to borrow a money which is having an element of refund. The first thing which you have to keep it in mind. Second thing, after you borrow the money, what are you supposed to do with that money? You have to use it for the purpose of business and profession. What do I mean by the term use it for the purpose of business and profession? The word use it for the purpose of business and profession is very wider. I can use it for various purposes. I can use it for the purpose of paying salary, for the purpose of paying rent, even for the purpose of buying assets. That is also allowed. The condition is you have to put the asset into use. Because till the time the asset is not put to use, the interest cost is what? It is capitalized. You have to put the asset into use. Then, sir, if I take loan for the purpose of paying income tax, sir, will I get deduction? The answer is no. Why? Because income tax is considered to be a personal liability. It's a personal tax. If you take a loan to pay income tax, then that loan ka interest will not be allowed as deduction. Because income tax is a personal liability. But if I take a loan for the purpose of making payment of what? GST, then that loan ka interest will be allowed as deduction because GST is considered to be a business liability. GST arises out of a business transaction. Income tax does not arises out of a business transaction. Income tax is applicable on every category of taxpayer, whether you do business or you do not do business. It's applicable to everyone. But GST is applicable only to those people who are engaged into business. If you are not engaged into business, GST is not applicable. This is something which is very critical. Keep it in your mind. These 2 points. If you take loan to pay income tax, advance tax, TDS, income tax, any form of income tax. If you take a loan to pay income tax, interest will not be allowed as deduction. It is disallowed. But if you take a loan to pay what? GST, then it is allowed as a deduction because it is a business liability. Be very careful. These two adjustments are absolutely critical for you all. You have to keep these 2 points in your mind. This is very, very important note. Very, very, very important note. Sir, then at what rate of interest I should borrow the money? Should the assessing officer be concerned about it? The assessing officer should not be concerned about it, that at what rate I take loan. Assessing officer should not be interested about it. I can take loan at any rate of interest. I can take loan at 15%, 20%, 25%. Assessing officer should not interfere in that. He is not supposed to interfere in that. He is not allowed to interfere in all these things. Okay. Now, there is one very important case law. Let me tell you that case law. This case law, remember the name, SA Builders Supreme Court and Reebok India Company Delhi High Court. Very important case. Now, what has happened in this case? Let me tell you the facts of the case. The assessee took a loan And after taking the loan, assessee started paying interest. Now, what assessee did with that money? After taking the loan, the assessee gave that money, that borrowed money, to its sister concern, or you can say to its subsidiary. So the moment the assessee took the loan, the assessee diverted the funds to subsidiary. So the AO did what? The AO disallowed the interest by saying that you are diverting the funds to sister concern. The assessee made an argument that we are not diverting the funds, we are giving the funds to sister concern because sister concern is important for our business, and sister concern is an extended arm of our entity only. And sister concern is something in which we have a deep interest. That is the reason we are giving loan to sister concern. Assessing officer said, no, you are diverting the funds to sister concern, so we will disallow the interest. The matter went to Supreme Court, and the Supreme Court said that you have to look into the facts and circumstances of every case, and you cannot, without looking into the facts and circumstances, say that the funds are diverted. You have to check into the commercial expediency of every transaction. If the commercial expediency says that the funds which are borrowed by SSE and given to the sister concern are for the business of the group, then it should be allowed as deduction. But if the funds are raised by the entity and given to the sister concern, and in sister concern directors are using for their personal purpose, then the interest should definitely be disallowed. So you have to look into the facts and circumstances of every concern, every case. Every fund given to sister concern is not diversion of funds. Every fund given to sister concern is not tax evasion. So you cannot have a general thumb rule that money given to sister concern is disallowed. No, 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 no. If I am taking a loan and I am giving it to sister concern, there has to be some reason. Maybe because sister concern is very small, they are not getting loan from market. So that is the reason I am doing it. So I am taking the loan. I have credit worthiness in the market. So I took the loan. I gave to sister concern. Because they don't have credit worthiness. That is the reason we are giving it. So every diversion need not be tax evasion. Every fund given to sister concern need not be an evasion of tax. You have to look into the facts and circumstances of every case. This is what it is written in this particular case. It's a very important case. So what all things I have said you in this section? That you have to borrow money. Borrow means what? There has to be an element of refund. Then you have to use that money for the purpose of business and profession. Use for the purpose of business and profession means you can use it for the payment of expenses, even for buying assets. But for paying income tax, not allowed. For paying GST, allowed. Very important aspect. At what rate of interest I should raise money? You can raise money at any rate of interest. Assessing officer has no role to say in that. He has no right to say at what rate I should borrow the money. Then, if I raise the money and give it to sister concern, will I get the deduction? The answer is yes. The answer is no also. That depends upon all the facts and circumstances of relevant case. Okay. Now, there is one very important case law over here. Let me tell you the facts of that case. Now, what has happened over here? There is an assessee over here. And there is IDBI bank over here. Assessee has took a loan from IDBI bank. Now, after some time, the assessee went to bank for what? For reduction of interest. The bank said that you have to pay 1 lakh rupees as a premium, as a lump sum premium. The bank said me that you have to pay 1 lakh rupees as lump sum premium. Generally, what happens when you go to bank to reduce the rate of interest? Now they take some charges from you. They do not reduce the rate of interest without taking charges. When it comes to increasing the rate of interest, now they increase without asking us. So now the RBI repo rate is increasing. So they increase the rate of interest without asking me. But when it comes to reduction, then I have to go to bank again and again, tell them, then I have to pay charges, and then they reduce the rate of interest. So I went to the bank and I said that I want to reduce the rate of interest. The bank said that you pay 1 lakh rupees, will reduce your rate of interest, will restructure your loan. I paid 1 lakh rupees. Okay. The moment I paid 1 lakh rupees, the tenure of the loan was 10 years. Okay. I asked for the deduction of this. I asked for this deduction in one shot. One shot means in 1 year. But the AO said that, the assessing officer said that I will not allow you this reduction in one shot, but I will allow you 1 lakh divided by 10 years. I'll allow you 10,000 every year. This is the fight between the taxpayer and the department. The assessee is saying that I want deduction in one shot. The department is saying no, we will allow deduction in 10 years over the life of the loan. The matter went to Delhi High Court. The case of Gujarat Guardian Limited, very important case law. Already ICI has asked this question twice. What will happen in this case? Whether this will be allowed in one shot or whether this will be allowed in 10 years. This is the issue. What is this expense? This expense is in respect of lump sum prepayment premium, which is nothing but what? Which is nothing but a charges which I have paid for reduction in the rate of interest. For this purpose, the court said that you have to first of all see whether this particular amount is an interest or not. If this particular amount can be called as what? Interest. Listen carefully. Then IDBI being a public financial institution from which you have taken loan, and if this is an interest, then it will be allowed as per 43B on payment basis. Because in 43B, interest is allowed on actual payment if you take loan from public financial institution or scheduled bank. So if this IDBI can be called as a public financial institution, yes, it is a public financial institution, and if this 1 lakh can be called as interest, then this 1 lakh shall be allowed on payment basis, and you have made the payment of 1 lakh, you will get the deduction, though no need to apportion over the years. So the first duty of ours is to understand whether it can be called as interest. For that, we need to see whether the definition of interest is there under income tax law, and you will be surprised to see that yes, there is a definition of interest under section 228A. I don't know whether you are aware of this or not. And it says interest means interest payable in any manner. Interest means interest payable in any manner in respect of any money borrowed or debt incurred, and includes what? Service fee or other charge in respect of money borrowed. And therefore the court said that this 1 lakh rupee can be called as other charge in respect of money borrowed. You have borrowed a money, and this 1 lakh rupees you are paying in respect of this borrowed capital only, and this can be treated as any other charge in respect of money borrowed, and therefore this amount of 1 lakh can be called as interest. And if it is called as an interest, you have taken the loan from IDBI, a public financial institution, it shall be allowed as deduction in 1 year, because it is now allowed as per 43B, irrespective of the accounting, in the year in which you make the actual payment. And have you made the payment of 1 lakh rupees? The answer is yes. I have made the payment of 1 lakh rupees, therefore I should get the deduction. It's a beautiful case law. Beautiful, beautiful, beautiful case law it is. Very, very, very important case law and extremely beautiful case law. So what happens in 43B? You get the deduction of interest on actual payment. So now, because this can be called as, this lump sum prepayment premium can be called as what? As an interest, and the loan is taken from a public financial institution, it is classic case of 43B. And if it is a classic case of 43B, it shall be allowed as deduction in one single shot. That's it. It is allowed as deduction. You can check over here. Okay. Since we have done discussion of interest, it is our duty equally to understand the discussion on discount on zero coupon bond. What are zero coupon bonds? You all are aware of the term zero coupon bonds. Zero coupon bonds, what happens? I am a company, you are an investor. So I will issue you bond at a discount and I will redeem at par. For example, if the value of the bond is 100 rupees, so I will issue you the bond at 50 rupees and I will redeem the bond at how much? Say at 100 rupees. So I will issue at 50 and I'll redeem at 100. For me, 50 rupees is cost, and for you, 50 rupees is income. Because today I am issuing at 50, so you will be paying me 50. And I have to pay you back 100. So for me, 50 rupees is cost. So how we get the deduction of this cost? Let's try to understand this with the help of an example. The government says that you will be allowed the deduction of this 50 rupees over the life of the bond. So you are supposed to apportion this. You are supposed to amortize this 50 rupees cost over the life of the bond. So for that, we need to take one example over here. Suppose the issue date is 13 September. I am taking deliberately an odd date. I am not taking an even date to explain you something very important. Suppose I am issuing bonds on 13th of September 2022, 10,000 bonds in quantity, issue value 100, redeemable value, sorry, issue value 50, redeemable value 100. The life of the bond is 5 years, and therefore I am redeeming the bond after immediately after 5 years, that is on 12th of September 2027, 5 years will be completed. Okay. Now, what is my total cost? What is my total cost? My total cost is 50 minus 100, that is 50 rupees into 10,000 bonds. So my total cost is 5 lakh rupees. Okay. On every bond, I am supposed to incur extra 50 because I am getting 50, I am supposed to repay 100. So 50 rupees is my cost. So 100, 10,000 bonds into 50 will be my cost. Total cost is 5 lakhs. How will I get the deduction of this 5 lakhs? Over the life of the bond. Now, how to compute the life? So you have to compute the life from this date to this date. But the thing is, you are not supposed to compute the life in the terms of years, but you are supposed to compute the life in the terms of months. So you are supposed to compute in the terms of months. So while computing months, how will you compute months? If it is a partly completed month, so listen. If you have issued the bonds for 15 days or more, then you have to take that month as a complete month. It means if you have issued the bond for less than 15 days, then you have to ignore that month. So in a particular month, if you have issued the bond for 15 days or more, you have to take that month as a complete month. Like for this September 13, 2022, you are issuing the bond. So you are issuing the bond on 13 September. So in September 13th to September 30th, there are 18 days. So you have to consider September. So you have to suppose to consider September to 22, October obviously, November obviously, December obviously, Jan obviously, Feb obviously, March obviously. So in the first year, there are 7 months. Okay. Now in the second year, there are 12 months obviously. In the third year, the bond was there for the entire year. In the fourth year, the bond was there for the entire year. In the fifth year, the bond is there for the entire year, and the last year. Okay. In the last year, the bond is there in the month of April 27, May 27, June 27, July 27, and August 27. September you are supposed to ignore because in September the bonds are there for only 12 days. So if the bonds are there for less than 15 days, ignore that month. So in the last year, it is there for 5 months. If I total this particular thing, I will get exactly 60 months. So this is how you are supposed to compute from year till year, months, not years. Years, so we know it is 5 years. You are not supposed to apportion on the basis of years, but on the basis of months. Once you do that, this is your total cost, this is your total month, and this is your per month cost. Once you get per month cost, you will start to compute what? You will start to compute per annum data. So in the first year, from September to March, there are 7 months, so 7 into per month data, then 12, 12, 12, 12 into per month data. And then in the last year, it is 5 months into 8,333. So it is 5 months into 8,333. So in the last year, I will get this much reduction. So if I total it, all of them, I will definitely get how much? There is no second thought, it's mathematical. I will definitely get how much? 5 lakh rupees. So the catch over here is, when you pick up the issue date and the redeemable date, you have to count number of months between the two and not number of years. And the total discount will be divided by number of months and not number of years. And if it is for 15 days or more, then take it as a complete month. Okay. And if it is for less than 15 days, then ignore that month. The way we have ignored here, September 2027. I hope it is clear to all of you. Okay. Not very important in CA final. Nobody is going to ask you. No, I don't think so. There is any question also in the study material based on this. So we have done it from our end, this question, so that you understand in a better manner. In institute material, I don't think so there is any question also on zero. Okay. But the next few issues are extremely important. So pay absolute attention on the board. The next few issues are employer making certain contribution. For what? For employees. So will employer get the deduction? The answer is yes. So employer does a lot of contribution for employees. Like, let's see one by one. Okay. First, 3614. Employer contribution. Employer contribution to what? Recognized provident fund, not unrecognized provident fund. Unrecognized provident fund is not allowed as deduction. Or superannuation fund is allowed as deduction subject to 43B, means actual payment basis. You have to pay the amount, then only you will get the deduction, not on accrual basis. Okay. Then employer contribution to certain approved pension fund. Pension. First was provident fund, second is pension fund. Is allowed as deduction. But here there is one more condition. The deduction, the contribution should be less than equal to 10% of salary, and salary here means basic and DA in terms, that's it. It means what? It means if the salary, that is basic plus DA, is 30 lakh rupees, then the contribution cannot be more than 3 lakh rupees. If the salary is 30 lakh rupees and I am making a contribution of 4 lakh rupees, okay, then I will get deduction of only 3 lakh rupees. I will not get deduction of more than 10% of the salary in this case. If the salary, that is basic plus DA, is 30 lakhs and I am making a contribution of 4 lakh, 5 lakh, 6 lakhs, I will get deduction of only how much? Of only 3 lakh rupees, not 4 lakh, 5 lakh, 6 lakhs, not allowed. Okay, check. Check. So in the first section, there was nothing like that. But in the pension fund, there is a restriction of 10% of salary. Salary means basic plus DA. It will not be allowed more than that. Okay. So in the first section, you are contributing to recognized provident fund, superannuation. Second, pension fund. In third section, you are contributing to approved gratuity fund. All three are employers' contribution. And all of them are subject to 43B, means all of them will be allowed based on what? Actual payment only, not on accrual basis. Okay. It is not allowed on accrual basis. It is only allowed on actual. Okay. So the three contributions which are made by employer. First, if you see on the debit side of P&L, employer contribution to recognized provident fund, allowed. If you see on the debit side of P&L, employer contribution to superannuation fund, allowed. If you see on the debit side of P&L, employer's contribution to pension fund, allowed, but subject to 10% of salary, not more than that. Up to 10% of salary allowed. If it is more than 10% of salary, it is not allowed. Excess amount will be disallowed. Okay. 10% would be allowed. So if it is salary is 30 lakh and if you are making 4 lakh, then 3 lakh will be allowed. I am not saying entire 4 lakh will be disallowed. I am not saying that. 3 lakh will be allowed. And employer contribution to approved gratuity fund, allowed. Okay. Now coming to the fourth point. Pay attention please, and this one is an important point. Suppose there is employer over here and there is employee over here. Okay. And suppose the employer is contributing 5,000 rupees to what? The recognized provident fund. At the same time, what happens? The employer also deduct what? 5,000 rupees from employee salary. Employer does or not all these things? From employee salary also he will deduct some amount. Yes, he will do that. So the government says what? Suppose this is the P&L of employer. The government says that the moment you deduct this from employee salary now, how much you have deducted? 5,000. The employee's contribution of 5,000 will be considered as what? Income. It will be income. It will be income of what? It will be income of the employer. Where it is written? It is written in section 224(10). The moment I deduct, listen carefully, I am employer, you are employee. The moment I deduct your contribution also I am supposed to deduct and pay to the fund now. First contribution I will pay from my pocket. That is my contribution. Second contribution I will deduct from your salary and pay to the government. Right? So the moment I deduct, the government says that this is your income. Okay. Now I am supposed to pay this particular contribution to the government by 15th of next month. If this is of April, then I am supposed to pay by 15th of May. If I pay by 15th of May, then I will get the deduction of this, of 5,000 rupees. I will get deduction only if I pay by what? 15th of next month. Otherwise, it is not allowed as deduction. Okay. Now, why this has been done? First, it is considered as income. Then it is allowed as deduction. Why? So that the employer should be keen, very keen, should be worried about making the payment of employee's contribution on time. And what is this 15th, sir? 15th is the due date mentioned under the recognized provident fund law. That is the due date mentioned under the provident fund law. So employee contribution is also allowed as deduction. because first it is considered as an income and then it is allowed as deduction to the employer. First income and then deduction. Then if you pay within 15 days, this 5,000 will get nullified. If you do not pay within 15 days, you will not get the deduction. If you don't get the deduction, this 5,000 will be subject to tax. The employer will be very keen to make the payment on time. So this is what this provision has to say. Read it, please. Employee's contribution to RPF is allowed as deduction if paid before the due date of the relevant fund, and the due date is 15th of the following month. It is pertinent to note that employee's contribution is considered as income first when it is deducted from the salary of the employee. Thereafter, when it is paid before the fund's due date, that is 15th of the following month, then it is allowed as deduction to employer. Therefore, it gets what? It gets nullified. I hope it is clear to all of you. It gets what? It gets nullified. Is it clear? I hope it is clear. Right? Now, coming to the next section. Now, these four sections were extremely important. Now, please. These four. All the four were extremely important for exam. Okay. Now, coming to the next section, a small one. If I purchase some animal for my business, say I am purchasing some dogs, some camels, some bullocks, say some bulls, or some horses for the purpose of my business, will I get deduction? The answer is yes, but listen how. How and when? When? Suppose I purchased an animal and the cost of the animal is 30,000 rupees. So I will not get the deduction on the date of purchase, but I will get the deduction on the date in the year in which the animal is either dead or is useless. So the deduction is available in the year in which the animal is dead or the animal is useless. Otherwise, the deduction is not available to you. It will be available in the year in which it is dead or useless. So in 22-23, I purchased an animal for 30,000 rupees. I will not get the deduction in 22-23. I will get deduction say in 25-26 when the animal is dead or has become useless. How much? Then you have to compare the cost, that is 30,000, with the sale value. Say the sale value is 5,000. Then 30k minus 5k, 25,000 will be considered as what? As deduction in the year in which the animal is dead or has become useless. Check. Not very important for exam. Don't worry about it. It's not a section which is very common now. How many assessees case you have seen all these things in practical life? Very rare. I don't think so. You have seen. You have seen that this is the treatment you have to give. Okay. So not very important section. The previous four were very important. The next one is also extremely important. Now what is the next one? The next one is very important. Deduction of actual bad debt. Circle. Actual means what? Actual means actual. The income tax law does not recognize what? Provision for bad debts. They will only allow you actual bad debts. Just a second. Give me a time to read. Actual bad debt deduction is allowed. Now there are two conditions that we have to fulfill. I'll explain you both of them. First, I'll read both of them. First of all, you have to write off the debt in the books of accounts. Okay. And secondly, the debt must be taken into income of the assessee earlier. Okay. Now, what do I mean by this? What do I mean by these two conditions? These two are very basic conditions that any person has to fulfill, and everybody fulfills who wants to claim deduction. Suppose this is my trading account. Okay. And I have sold some goods by credit sales, 1 lakh rupees. This is my balance sheet. This is my debtors, 1 lakh rupees. Now suppose this has become bad. So this is my trading P&L account and I will claim this as what? Bad debts. Okay, 1 lakh rupees. And I will remove this 1 lakh. So the two conditions which the law is saying: first, it should be written off in the books of accounts. Condition number 1 fulfill. Yes, it is written off in the books. It should be taken into income earlier. Yes, it was taken into income earlier. It was a part of P&L account earlier. Therefore, both the conditions are fulfilled. And because both the conditions are fulfilled, you will get the deduction of bad debts. So you have to claim deduction of bad debts. If you want to claim the deduction of bad debts, you have to first of all write off in the books. Yes, I have written off. And secondly, you have to do what? You have to take into income earlier. Yes, that is also something which I have done earlier. Both the conditions are fulfilled. But for banks, this second condition is very dangerous. For banking industries, this second condition is very dangerous. So for them, the government has made certain exceptions. Now, how for bank it is dangerous? Let me explain you with the help of example. Suppose this is SBI. Okay, this is SBI's balance sheet, and SBI has given a loan of 10,000 crore to someone. Okay, on which there is an interest receivable of 3,000 crore. That person has not paid an interest to the extent of 3,000 crore. Okay, now this is a P&L account of SBI. Now, what will be the income of SBI? Income of SBI will be 3,000 crore. Okay, because interest is considered to be an income which is forming part of P&L. Now, listen carefully. The problem which they will arise. Now, suppose this person has done the bad debts and he is not giving any money. This entire 13,000 crore is bad. And if I write off this 13,000 crore in P&L account, okay, through bad debts. And if I want to claim deduction under income tax law, then in that case, condition number 1 is what? You have to write off that in the books of accounts. Yes, I have done it. Condition number 2 is what? It should be taken into income earlier. Now, how much was taken into income earlier? Only 3,000 crore. The 10,000 crore was never formed part of income because that was not an income, that was a loan, na. But that is also bad, na, for banking industry. For banking industry, the principal portion is also bad or not? The principal portion never forms part of income earlier. It directly goes to balance sheet. The interest portion goes to income and then you can write it off as a bad debts. But the principal portion is directly forming part of balance sheet. It was never part of income. So that will be genuine hardship on the banking industry, and therefore the government has said that this condition, there is an exception for banking and money lending business in relation to the loan amount. So in relation to the loan amount, that is how much in my example, that is 10,000 crore. They are not supposed to what? Prove that loan amount was part of income earlier. They are not supposed to prove that. For others, they have to fulfill two conditions. That is, you have to write off also and you have to also prove that it was part of income earlier. But for banks and money lending institutions, they don't have to prove that this 10,000 crore was part of what? Part of income earlier. Okay, I hope it is clear to all of you. Okay. Now, the next point. Am I supposed to prove it to the government my debt has become bad? Am I supposed to tell the government that I have taken all the necessary steps? Still, I am not able to recover the money. Am I supposed to do all those things? Supreme Court of India in the case of TRF Limited has held that you are not supposed to establish all these things. You are not supposed to do all these things. All these things are absolutely not necessary to claim bad debts. Only condition which you have to fulfill the two conditions which I have told you just now. That is, you have to write off and you have to take into income earlier. And that too for banking industry, there is an exception. Therefore, it is not necessary to establish that the debt has become irrecoverable. It is enough if you write off, that's it. That is much more than enough. Sir, will I get the deduction of provision for bad debts? No. Bad debts shall include actual bad debts and not provision for bad debts. For provision for bad debts, there is a separate section which we'll be doing later, which is only for banking industries and not for all other industries. Provision for bad debt deduction is allowed, but only to banking industries, not for all kind of associates. Okay. So now, what all things I have said you so far? To claim bad debts, what am I supposed to do? First of all, the debt has to be actual. Secondly, you have to write off the debt in the books of accounts, and thirdly, you have to take into income earlier. For banking industry, it was not taken into income earlier. It is well and fine, because for them the loan amount was never formed part of income, but that also become bad along with the interest income, right? Then comes, it is not necessary to prove that your debt has become bad. You have to just write it off. That's it. Then provision for bad debts is not allowed as deduction. Okay. Now the next one, listen carefully, very important issue. The next one is also, suppose what happens, there is an amalgamating company who has sold some goods. Okay. Now that amalgamating company is getting sold to an amalgamated company. The goods are sold by the predecessor, that is the amalgamating company. Now that debtor is transferred to the amalgamated company now. Now the debt has become bad in the hands of amalgamated company. Will the amalgamated company get the deduction? The answer is yes. If the goods are even if the goods are sold by amalgamating company, the amalgamated company can claim that deduction as per the Supreme Court judgment of the Veerabhadra Rao K. Koteshwara Rao. Just check this. Just check this. The Supreme Court has held in the case of the Veerabhadra Rao K. Koteshwara Rao that in case of amalgamation, if the goods are sold by the predecessor and it has become bad in the hands of the successor, then also the deduction of bad debt shall be allowed to the assessee. It will be allowed, don't worry. Okay. I hope it is clear to all of you. Okay. Now, one last thing is there in this particular section. Let me talk about that. And this is a very, very critical point. Pay attention, please. It's a very intelligent point. Now, what happens? This is the conflict between the accounting standards and the ICDS. The accounting standard says what? You should recognize revenue only if there is a reasonable certainty. Okay. Listen carefully now. The accounting standard is very firm and it says very clearly that you should recognize revenue only if you have a reasonable certainty that you will receive the revenue. Okay. Otherwise, you should not recognize revenue. Now, ICDS says in some cases, not all, especially in the case of services, not in the case of goods, that you should recognize revenue even if you are not reasonably assured. Even if you don't have reasonable certainty, recognize. Now, suppose, so there is a disparity between the two. Account says that you should recognize revenue only if there is what? There is a reasonable certainty that you will receive. But ICDS says in case of services that you can recognize a revenue without reasonable certainty also. So suppose I provide services of 1 lakh rupees and there is no reasonable certainty. Then will I recognize that in accounts? No. Will I recognize that in tax? Yes. Will I pay tax on this? Yes, pay tax. The government says that you have to pay tax on that amount also. Especially in case of services, in case of goods, it doesn't say that. In case of goods, accounts and tax both are same only. But for services, the ICDS is changed. The ICDS says that you have to recognize the services even if there is no reasonable certainty. Now, suppose take an example. You have provide services of 1 lakh for which there is no reasonable certainty. So you will not record in accounts, but you have recorded in tax, you have paid tax. Now, what if it becomes bad debts later on? Can it become bad or not? You have recorded that item in tax now, and it can become bad later on then. Then what will happen? You will claim bad debts, and when you go and claim bad debts, first condition to claim bad debts is you should write off in the books of accounts. Now, how will I write off this in the books of accounts, which is not recorded only in the books of accounts? To write off anything, first you have to record that. Now, this transaction was directly recorded in tax, not recorded in accounts. How will I write off that in accounts then? Because the law says that to claim bad debts under the income tax law, you have to write off that in the books of accounts. And in the books of accounts, such transaction is not recorded only because of accounting standard. So how to overcome this problem? So if a revenue is not recognized in accounts, but recognized in tax, and later on if it becomes bad, how will I write off in that in books? I cannot write off that. So for that purpose, the government has provided this provision that any income which is offered for tax as per ICDS, yes, our income of 1 lakh is offered for tax as per ICDS, without recording the same in the books of accounts. Yes, we have not recorded in the books of accounts because accounting standard stops us. If it becomes bad, then it shall be deemed that such debt is written off. Then the government is using this deeming fiction by saying what? It is deemed that it is written off in the books of accounts. And accordingly, you will get what? You will get the deduction of bad debts. So the ICDS is now starting to go away from what the account says. The account says that you have to recognize only if it is reasonable certainty. Tax says that forget about reasonable certainty for services at least. Record the transaction and pay tax. And once you pay the tax, if it becomes bad later on, you cannot go to accounts and ask for writing off. That is the reason they have put the word deemed over here. So that the condition number 1 is fulfilled. I hope it is clear to all of you. Okay. Now they have not asked this particular provision also so far in the exam, even though it has been there since 2015. There has been more than 12 to 13 attempts after that. Still they have not asked this question. They should ask. It's a beautiful provision. Anyways, let's move on to one last few provisions over here for the day that will complete our series of section 36. Now, section 36(1)(9). What does it talks about? This talks about expenditure on promotion of family planning amongst employees. And who will do this? It is only applicable for companies. So this section is only applicable for companies, only corporates, not other. So if a company is incurring any expense on promotion of family planning amongst the employees, they will get the deduction. Okay. How much deduction? Will this deduction be allowed to firm, individual, HUF? No, no, only to company. That too if they incur any expense in relation to family planning amongst the employees. How much deduction they will get? So they will get deduction to the extent of, if it is revenue, then fully allowed. If it is capital expenditure, then it will be allowed in 5 equal installments. Revenue expenditure, fully allowed. Capital expenditure, 5 equal installment, not allowed in one shot. If you are doing some capital expenditure, building, plant, machinery, furniture, all those things you are purchasing for that, then 5 equal installment. One more important aspect. If there is a loss because of the capital expenditure, there is a loss, then it will be treated like UAD. So if there is a loss because of the building which is purchased for what family planning, it will be treated like unabsorbed depreciation. It means it can set off against any income except salary, and it can be carried forward for infinite number of years. Therefore, the salient features of this section is very clear. It is only available to company. It is available in respect of expenditure on promotion of family planning. If it is revenue, then it is fully allowed. If it is capital, then it is allowed in 5 equal installment. And last but not least, if a loss is there because of capital expenditure of family planning, it is as good as what depreciation. Because this is also capital, depreciation is also capital. Okay. And it will be treated like UAD. Okay. Now, moving ahead to the next one or two small points, that is, if you want to claim deduction of securities transaction tax, you will get deduction of security transaction tax provided you are trader in securities. You should be Motilal Oswal, you should be Anand Rathi, who are trader in securities. Regularly they trade. So if you are a trader in security, you will get deduction of what? You will get deduction of securities transaction tax under PGBP. But remember, in capital gains, you do not get deduction of what? STT. Do you remember that? Even if you don't remember, I have put a cross linking over here of the chapter of capital gains. Whenever we will do capital gains, we'll talk about that. But I have done just a cross linking of the topic. Okay. So if you are providing what? STT. If you are making payment of STT, it is not allowed as deduction. Okay. Now, here I would like to say one thing. Company. There are many other sections where the word company is used. Sir, which are those sections? We have not done so far. This is our first section so far. But I have made a list over here for your reference. The entire interlinking of PGBP chapter. Entire. If you come to chapter number 10 in your textbook, entire PGBP is linked in 1 or 2 pages. What are the sections where manufacturing or production is written? What are the sections where company is written? One of them we have done today. What are the sections where Indian company is written? What are the sections where amortization happens? One amongst them we have done today, that is family planning, capital expenditure. What are the sections where deductions are based on certain percentages? What are the sections where lock-in is mentioned under the income tax law, that you cannot sell the asset for some years? What are the sections where new plant and machinery is mentioned? So entire PGBP is interlinked over here. So in few minutes, you can just wrap up the entire topic interlinking part so that you are not getting confused between different provisions. Okay. So that is something which has been done from my side for your benefits. So you can take maximum benefit out of it. Okay. Now coming to the discussion which we have been doing. If I am a trader in security, will I get the deduction? If you are a trader in security, you will get a deduction of what? STT. But if you are not a trader and you are asking for deduction in capital gains, then don't ask for deduction in capital gains. In capital gains, you are not going to get any deduction of STT. Please. Now, similarly, if you are a trader in commodities, If you are a trader in commodity, then also you will get deduction of commodity transaction tax under section 36(1)(16). So you will get a deduction of what? Commodity transaction tax under section 36(1)(16) if you are a trader in commodity. Okay. So there are so many people who trade in commodity market also, MCX. I hope you would have heard about it. Okay. The way we trade in BSC and NS for securities. The next one is exclusively for cooperative society. The way this section was exclusively for company. Similarly, this section is exclusively for cooperative society. That to what kind of cooperative society? Count the conditions on your fingers. First is the associate has to be cooperative society. Second, the associate has to be engaged in the manufacturing of sugar. And for that purpose, they are buying what? Sugarcane. So this section talks about reduction of sugarcane cost. So to manufacture sugar, you obviously want sugarcane. And this deduction is exclusively for cooperative society. If a cooperative society for manufacture of sugar buys sugarcane, then they have to buy at a price equal to or less than fixed or approved by the government. They should not buy more than the price which is approved by the government. This is to stop black marketing of sugar. This is to stop black marketing of sugarcane. So government will fix a price. So you have to purchase at that price or lesser than that. Don't buy at more than that from black market. Not allowed. So deduction is available to whom? Cooperative society. What is the cooperative society doing? Manufacturing of sugar. What are they buying? Sugarcane. At what price they are supposed to buy? The price which is fixed by the government. Okay. They're not supposed to buy at a price higher than the government price. If you do that, you will not get the deduction. I hope it is clear to all of you. Okay. Now, one last thing over here that will complete this chapter. Deduction of mark-to-market loss. Now, what is mark-to-market loss? Mark-to-market loss is nothing but suppose you have bought some investments. Okay, the mutual funds. Then you have to change the value of that on a daily basis. Change value on daily basis. Means what? Suppose if today I bought the value, so suppose if today I bought the mutual fund and today the value of the mutual fund is 100 rupees. The NAV of the mutual fund is 100 rupees. Okay. Now, if tomorrow the value increases to 102, then I have to recognize gain of 2 rupees. Then on the next day, if the value reduces to 101, then I have to recognize loss of 1 rupee. So you have to mark your investments based on what? The market. That is the reason it is called as mark to market. So if I am marking my investments as per market, will I get the deduction of that particular loss? If my mutual fund reduces from 100 to 95 on a daily basis, yesterday it was 100, now it is 95. So 5 rupees deduction will I get? The department says yes, only if you claim deduction as per ICDS. Okay. If you do not claim deduction as per ICDS, then it will not be allowed. It will be disallowed under the income tax law. So the law says very clearly mark to market loss is allowed as deduction, but only if you claim that deduction as per what? As per ICDS. If you are not claiming as per ICDS, please don't ask for the deduction. We are sorry for that. I hope it is clear to all of you. So this is what this topic is all about. Certain small deductions like 30, 31 and 36. What is the role of them in the exam? The role of them in the exam will be in the form of a PGBP question. They will come in the form of an adjustment. If an adjustment comes, you have to tackle that adjustment. We will be doing a lot of questions later on. Don't worry. So whenever we'll be doing questions, I'll be addressing all those issues. Okay. So for right now, we'll stop the lecture here. We'll continue the discussion of sector-wise deduction in tomorrow's lecture. Okay. Bye all of you. Take care.